Good morning. My name is Patrick Dion. I am the president of Patrick Dion Consulting. I will begin by thanking you for the opportunity to appear as a presenter in the RMA 2021 annual conference, Refresh, Recharge, and Reinvent. For the past 6 years, I've had the privilege of collaborating with the members of RMA's Government Affairs Committee, and this year, in particular, Committee Chair Louis Fortin, to help guide and advise the RMA Board of Directors in its engagement of government stakeholders, as well as helping to advance the concerns of the industry and advocating for legislative and regulatory changes that support the receivables management industry and its members. In each of the past 6 years, I have provided delegates to the annual conference with an update on government affairs activities for the past 12 months, endeavoring to do so in as succinct a fashion as possible while highlighting developments of relevance and engagement efforts that have helped to advance industry aims. It's my intention this morning to do that for what is the second year in a journey that has been unorthodox, and yet was a time when advocating for matters of concern to the industry's well-being was critical. There were times of uncertainty, yes, but also opportunities to help advance and advocate for change that will have a long-term benefit for the industry and indeed its members. For the second consecutive year, the world has faced and managed its way through a global health crisis, not seen in a century and a half. The consequences to the economy and to the health of Canadians from coast to coast to coast has been extraordinary and for many fatal. Indeed, the receivables management industry has faced threats to operations, near-term viability, and long-term sustainability. Workplace restrictions that remain in place and the emergency orders that immediately followed the declaration of a global pandemic forced our industry to pivot and to adapt. The industry's nimbleness to manage such change has been quite notable. Its demonstration of its ability to adapt and evolve while remaining compliant with all COVID measures put in place by governments is a track record of which to be proud. The industry placed the highest premium on employee and client well-being, all while navigating times of unprecedented uncertainty, to observe, only in these past few months, a business marketplace with greater stability and certainty. The board, supported by the Government Affairs Committee, helped members to navigate and respond to unforeseen challenges, but also to put forward to government the industry's concerns that helped to shape the lifting of emergency orders and the development of recovery plans. Yes, 2021 tested the resilience of the industry, but in so doing, strengthened its foundations and its values. I'd like to begin by acknowledging the collaboration I have enjoyed over the past 12 months among members of the Government Affairs Committee. Louis Fortin has capably chaired the activities of the Government Affairs Committee, and the members that you'll note from this slide span the coast geographically. And so I think for an organization which has a national mandate, it is certainly important to be gathering the perspectives of a wide range and indeed a pan-Canadian range of perspectives, and their efforts collectively and to advance the initiatives of the RMA have been notable, and I wanted to take a moment to thank Blair, Brian, Caroline, Patrick, Renee, Tracy, Linda, and Jeff Pilon, who has a spot on the board as the board president, which provides a very useful conduit between the activities of the GAC and the board of directors. Here is a group photo of the members of the Government Affairs Committee, and just to repeat what I said a moment ago, I wanted to acknowledge their insights and their cooperation in terms of the work that we've engaged in over the past 12 months. I think it's important to remember, or at least to underscore, that the mandate of the Government Affairs Committee is fourfold. Principally to provide strategic advice and background intelligence to the RMA board members, also to advocate for policies and regulations that strike a balance between industry and consumers. Thirdly, to facilitate the engagement of key stakeholders, both those elected officials and unelected officials, and other industry stakeholders that helped to shape the receivables management industry in Canada, and more generally to help create a widespread awareness for the receivables management industry. I think it's fair to say that the overarching aim of the Government Affairs Committee, and indeed the RMA more broadly, is to strive for a status that is rare, but nevertheless is well earned. And that is to become a national voice, which we are by definition, in that we have membership from coast to coast, and a board that is devised largely of regional representation. But I think aspiring to become a trusted advisor to government, again, is not earned overnight, but I think in the course of the past 5 years, we have made great strides as an association to achieve that status. That status is actually borne out by being able to get to a point where not only do you put forward your opinions and your positions to government, but government begins to seek your opinions on things in a bilateral manner. And that bilateral relationship is so important because not only do you continue to help shape your public policy agenda, but the government's interest in your views before introducing policy initiatives that may have had unintended consequences, unless, of course, government sought the industry's opinion out in advance, is really what the RMA is now continues to enjoy elements of that. But I think there's more work to do. But together we've made some progress again in 2019, 2020, and would continue to engage in activities to help further enhance that initiative going forward. And so the map of Canada, perfectly symbolic of the scope of government affairs activities over the course of the past 12 months that I intend to highlight at the provincial and federal levels of government. It is not a surprise to have me report that in 2021, government relations efforts focused near solely on responding to and advocating for measures and policies linked to COVID-19. I am, however, hopeful that as the country moves forward into or towards a post-pandemic universe, what many are calling a reformed normal, that governments, and in particular provincial ministries responsible for the governance of the industry and consumer protection more generally, will return their attention to more widespread traditional regulatory activity. But for the near term, I'm afraid we're stuck with our current challenges, or at least responding to our current challenges. So what did RMA witness in 2021? Well, the truth is RMA members witnessed plenty, both good and not so good. Given the aim of my presentation is to avoid too philosophical a discussion, over the course of the next 15 or so minutes, I will focus on developments in 3 key areas: general observations and activities of the industry and membership during COVID-19. I plan to touch on several non-COVID related developments at the Ontario and federal levels of government, and to highlight a significant regulatory workplace victory pertinent to many, but not yet all, key markets. In keeping with the frame chosen for the 2021 conference, I have also attempted to summarize these developments using the themes refresh, recharge, and reinvent. And then finally, in my final slide, I will wrap up with some observations regarding what may lie ahead. Before setting down the pathway under the theme refresh, I would like to properly acknowledge that the efforts in this area and in general through the last 12 months have been guided and supported and indeed led by Government Affairs Committee Chair Louis Fortin. Louis, in keeping with his focus and enthusiasm for RMA-related activities, was very active in keeping in touch with regulatory bodies across the province, or in each of the provinces across the country, and certainly was in touch with a great number of you, passing along information that was relevant to the ever-changing times. But the first point, or the first observation I'd like to offer you, is that the resilience of our industry was tested, to be sure, as emergency measures were enacted from coast to coast to coast, beginning in March 2020. And that probably was not a surprise to any one of you, however unforeseen the pandemic may have been, this is an industry that has endured many challenges, and certainly the pandemic was a chance for us to remind ourselves and to our government partners as to the resiliency and the ability to refresh of the government or the receivables management industry. As the pandemic took hold in the months beyond March 2020, RMA members pivoted, nimbly demonstrating the initiative and creativity required to adapt to new business rules and to working remotely. And it's fair to say that the less experienced RMA members benefited from the insights of more experienced associates. And as I said in my earlier slide, Louis Fortin was, in many cases, the glue which held that together. And the exchange, that bilateral exchange of information, not only helped the RMA to inform government partners as to the challenges faced by industry members, but also to have industry members benefit from the insights to adapt and to pivot to the instantaneous requirement for us as a industry deemed to be essential to continue to work in remote locations. In keeping with the refresh theme, communication amplified among members, RMA members, formally and informally, and the industry was strengthened by RMA leaders. And it would be appropriate for me to offer my thanks, or on behalf of the membership, offer our thanks to RMA President Jeff Pilon. He, in the early and continued days of the pandemic, was very much in touch with his board colleagues and also with the membership at large through our website to inform and to take some strong leadership positions in terms of the industry's embrace of the emergency measures and to abide by the workplace safety requirements that were expected of all members of the industries deemed to be essential. And this communication was very key to ensuring that the members of our industry were not just well informed, but could offer their input to ensure for a better outcome for all. And at the expense of maybe declaring the glaringly obvious, despite facing significant financial and operational challenges, RMA members adapted to maintain service levels and continued to provide clients despite operational limitations. And this speaks to not just refresh, but also to the theme of general resiliency, which marks a large part of the receivables management industry's ethos. What can only be described as the refresh of a government-held belief, surveys collected by Canadian provincial regulators revealed that complaints from debtors and clients through the pandemic remained stable and in some jurisdictions declined. The challenges faced by Canadians was not lost on our industry. There was a humanity and a empathy that we understood was very real for a great number of us. And in cooperation with our clients, the steps that were taken to allow for the challenges faced by many Canadians to take hold was manifest in the survey results collected through that period. The demonstrated level of professionalism and care from all of our members did not pass a notice of key stakeholders and government officials in particular. And this can certainly be credited to all of us, and it is a mark of professionalism for an industry that has taken the time required over the course of the last 10 years to rebrand itself, and this development will certainly not be lost on anyone in government. At a general level, RMA remains steadfast, despite the circumstances, remain connected to regulators, provincial and federal decision makers, partners, and service providers. As a credit to many, but certainly to Louis and to Jeff, as noted earlier, RMA shared timely information on emerging changes in the Canadian marketplace, directed by government, but of relevance to our members. That information was posted in each case on RMA's website, including the delivery of virtual legal services, the virtual filing of claims in Canadian courts, the suspension of limitation periods, and the impact of deferments and the capacity to pay or to repay. The RMA was also able to provide quarterly credit bureau financial reports to its members, again provided through and on the RMA website, which offered key insights on Canada's economic outlook and helped members craft business strategies accordingly. Over the course of the next couple of slides, I would like to highlight for you the areas in which government, in spite of being seized with responding hourly, daily to the exigencies of the COVID-19 pandemic, there were some developments in areas unrelated to COVID, and I'd like to highlight those, beginning first with the federal level and then moving to Ontario. The first issue I'd like to highlight for you, or development I'd like to highlight for you, was actually one that began before the pandemic, but was certainly caught up through the period of the last 18 or at least 12 months, and I'll offer you those highlights now. I expect that many RMA members will remember that in 2019, the Auditor General of Canada tabled a report that offered observations and recommendations on a wide number of areas, but in particular to our industry, how the collections around the Canada Student Loan Program was not working as efficiently as it ought to. So although the activities in 2020 revolved around engagement of officials to try and convince them that the observations that the Auditor General made should result in a better management of the collection systems around Canada Student Loans, in particular, offering the collection activities up to a greater number of participants than the one that has been chosen currently. RMA, maybe in its frustration, decided that this issue had to be taken to the highest level, and RMA President Jeff Pilon wrote to the Minister responsible, Minister of Employment, Workforce Development, Carla Qualtrough, to seek an audience. And after a delay of a number of weeks, in fact, it may have been more like a month, RMA received a reply not from the minister directly, but instead from her officials, the very same officials that we had been in touch with some months earlier, and that ESDC, Employment and Social Development Canada, remained steadfastly bureaucratic in its position in that the Canada Student Loan Program portfolio was being well managed. Given that the government at the time was then looking like it was heading into an election, although the election call was delayed somewhat longer than anticipated, it was deemed to be imprudent for RMA to be pushing further. And so for the time being at least, this issue will remain dormant, and the activity, I'm afraid to say, has been relatively benign in terms of the expectation that we have for changes in this area. In a second development at the federal level, and this is a development I think it's fair to say falls under the theme of recharge. In June of this past year, the Office of the Superintendent of Bankruptcy launched a comprehensive review of directives and regulations under the Bankruptcy and Insolvency Act and the Companies Creditors Arrangements Act. These two federal statutes had not been reviewed for some time, and so the government, through the Office of the Superintendent of Bankruptcy, took steps to seek industry feedback on the reforms, and they posed a number of questions, a series of questions that helped guide that feedback. RMA filed a submission highlighting the industry's views in response to those key insolvency policy concerns. And we filed that report many months ago. Given the federal election of this past summer has taken place between RMA filing its report and the expected time when the Office of the Superintendent of Bankruptcy was going to respond with recommendations on how those two acts could be reformed. We're expecting that that will take place later this fall, probably ideally before end of calendar year, and we will commit to keeping RMA membership informed of those recommendations and RMA's subsequent response. Now I'd like to turn my attention to Queen's Park to highlight a number of developments, again, non-COVID related developments at the provincial Ontario level. Ontario remains a key market for most, if not all, RMA members, and these developments will have some relevancy. Again, keeping with the theme of recharge, over the past year, RMA continued to engage senior officials in the Ministry of Consumer and Government Services, both at the official level and at the Office of the Minister, to offer the industry's feedback on the proposed reforms to the Consumer Reporting Act and the Collection and Debt Servicing Act. Just as a bit of context, these two statutes were reviewed and reformed by the previous government, and the current government continues to wonder whether or not they need to be further finely tuned or fine-tuned. And so the activities in the past 12 months led by the ministry, somewhat delayed, of course, by the COVID-19 pandemic, has certainly been the focus of some of our RMA's attention these past 12 months. This next initiative, again, under the category of recharge, but not unrelated to COVID, in fact, directly related to COVID, the Ministry of the Attorney General of Ontario was contacted by RMA President Jeff Pilon in letter form to express the industry's concerns regarding the potential impact of the suspension of limitation periods and its consequences. Court backlog, of course, has been an issue for many segments of the legal community, not least the RMA's interaction with the suspension of limitation periods as it pertains to debt collection and so on. And so the concerns raised by the industry were shared with the minister, and we had some reaction in the near term in that the limitation periods through the period of the last 12 months were lifted to allow for that backlog to begin to dissipate. And while virtual court dates and court proceedings have certainly allowed for a lot of that backlog to dissipate, I trust there's work that remains in terms of getting through and returning it to a system that is efficient as can be expected. This next slide highlights, under the category, or the theme rather, of reinvent, what I would characterize as an industry victory. Offering a little background, as governments in Canada turned attention to developing plans to permit employees to safely return to the workplace, RMA wrote to provincial registrars and regulators to press the case for continuing to permit receivables management sector employees to work in virtual settings. And to offer credit where it's due, Tracy Arvinishan and Louis Fortin and others at the Government Affairs Committee brought this issue forward in a Government Affairs Committee meeting several months ago, and resulted in a letter writing campaign to each provincial regulator of relevance to the industry, but in particular BC, Alberta, Ontario, Quebec, and Nova Scotia, to highlight why the continuation of allowing the receivables management sector to allow its employees to work from home would have great benefit to the economic well-being of the industry without any diminution of consumer protection. And I'll speak a little bit more of that in the slides ahead. As I mentioned briefly a moment ago, beginning in July, regulators began to carefully consider remote workplace options for employees of the receivables management sector. In fact, I suspect they were considering other industries or sub-industries as well as subsectors as well, but we certainly were among those being carefully considered, and our letter writing campaign set out the case for why the many advantages of moving in that direction ought to be carefully considered. Over the course of the past 5 weeks, registrars of BC, Alberta, Ontario, and Nova Scotia have all cleared the way for collection agencies to conduct operations in non-congregate workplaces, namely, or quite specifically, to continue to work from home, which was the pivot that the industry made some 12 or more months ago. These developments represent a meaningful breakthrough for the industry. Permitting receivables management sector employees to work in virtual settings confirms RMA's long-held belief that credit collection services can be securely conducted from virtual non-congregate workplaces without a diminution to fidelity or privacy. And to offer one specific example, in the case of Nova Scotia, the minister wrote in response to amending their legislation and regulation, and I quote, "To accommodate collectors and debt management agents to continue contacting and working with Nova Scotians remotely from home, the legislation will be announced, or rather has been announced that it will be amended, and the Government Affairs Committee will be keeping the board and its membership advised as to the developments in that regard." And as a final punctuation to this victory, many RMA members have offered their congratulations following a big win for the industry, and the credit can be shared by many, but Tracy Evanishan could certainly be credited with bringing the idea forward, and the Government Affairs Committee and its leadership recommending to the board the steps that the board took under Jeff Pilo's leadership would certainly not be misplaced. And that concludes a summary, at least, of the activities over the course of the past 12 months, interrupted, of course, by the governments across the country responding to the pandemic. Nevertheless, some significant developments in a few key areas that I hope we can continue to push forward in the months ahead. I'd like to offer you some final thoughts before wrapping up in 3 key areas. I think the observations I would make over the course of 2020 would note that the RMA's response to the pandemic as it swept across the country was quite notable. We, as an industry, were very nimble in our response to put in measures in our workplaces to help in the protection of our employees and their families, and indeed Canadians from coast to coast. I know that the responses that we offered, both on our website and in letters to key government decision makers across the country, did not pass their notice. Being deemed in the early days of the pandemic an essential industry allowed us to continue to operate, keep people employed, and to do it in a safe and health-conscious manner. And I think that was a real win in a bad situation for an industry to demonstrate its willingness to be nimble and to be forward-thinking in terms of how it operates. A second point worth remembering is that while we're not through the pandemic yet, as we do emerge out the other side and we begin to operate in a new normal, I don't think we fully yet understand the economic consequences that are in store for Canadians, both at a personal debt level and a corporate debt level. There will be untold, at least at this point, untold consequences of how the economy will have been damaged. Given the work that the RMA members provide to the Canadian economy, there will be many opportunities for us to continue to demonstrate our leadership as an industry and to respond in a way that strikes that balance between measures and public policies that are both mutually beneficial to our members, but also to consumer protection. And I look forward to helping to guide the RMA through that process. Thirdly, is that in an effort to strengthen the RMA's value proposition to its members, the government affairs activities are key to helping to underscore that value proposition. And I would encourage any RMA member, given that you do work in the field every day, to continue or to at least think about bringing forward issues to either the Government Affairs Committee Chair Louis Fortin or the RMA President Jeff Pilon. Bring forward those issues so that we can consider them and decide whether or not we can provide some assistance in terms of advancing those strategic initiatives, but also how they might benefit the industry to advance its strategic aims. And I guess one final thought is to thank you for the chance, for the privilege really, to help be involved in the work of the receivables management industry in Canada. It's meaningful work. The COVID pandemic has proved that it's essential to the lives of many employees across the country, and I look forward to continuing to provide you guidance in terms of how to advance the RMA's strategic agenda in the months ahead. I will be available at 5:30 to answer any questions you might have related to any aspect of my presentation, both in written or in verbal form. And until then, I thank you for your attention and, of course, your continued confidence.